Well, welcome to our Park City Market Talk webinar. I'm Ron Wilstein, broker at Keller Williams Luxury Properties Worldwide in Park City.
And I'm Doug Olmstead, Sellers Consultant for the Wilstein team.
And we're here presenting our last webinar of the year, December 2014, and we've got plenty of good topics to cover. Since it is the last webinar of the year, we're going to look back at some key events that occurred during 2014 and have the implications on our community.
We will cover quickly property values are up in Park City. We'll break that down for you with homes, condos, lots in Park City proper, as well as out in Steinerville Basin, of course.
And then we're going to talk about Vail's recent announcement to invest $50 million into the Park City Mountain Resort in the Canyon. So if you ever wondered what you could do with the extra $50 million, we're going to tell you what they're going to do.
And then we're going to get Ron's predictions for 2015.
That's right. I'm going to gaze into the crystal ball, give you my thoughts on what I think is in the future for Park City real estate. So with that in mind, let's take a look back, kind of memory lane, and see what happened. Got to start and talk about the Sochi Olympics, the Winter Games. Of course, they didn't occur in Park City, but we had plenty of athletes from Park City. In fact, we early in the year when the games were going on, listed them. Here they are on our screen behind us. Our athletes did great, because this screen here shows these are the athletes who reside in Park City who came back with gold, silver, or bronze medals, and we're quite proud. I think for our little community in town, we carried the weight of the games, so it was awesome.
Yeah.
So we're quite proud about that. Very exciting.
Always popular, Sundance Film Festival every year in January, so good time to be in Park City and see some screenings and do some stargazing.
That's right. There's a couple of the stars there, and of course, good old Rob Redford. Then we shared a couple times during the year about the impact of our limited market. We've gone through a year where the inventory was at an all-time low, lower than at the very height of the market, and so we gave a couple good tips on how to best negotiate under those market conditions.
You know, one Wasatch has gained more momentum this year. If it comes to play, it could be over 18,000 acres of skiable terrain. And a few key things have come together this year to make it more of a reality, with Deer Valley purchasing Solitude Mountain Resort, and Park City and Canyons also combining now. So that could be a reality sooner than later. That's
right. I think just that change of ownership gets us one step closer in a big way. So we'll keep you informed on this one. That's a big one. We also identified a couple times during the year the hottest markets from an investment point of view, or just where inventory was lower and valuation appreciation was on the rise, and that was actually very helpful for a lot of people's investing strategies.
We touched briefly on radon gas in homes, what it means, and how to remediate. So as you can see, webinar on that.
And during tax time, we gave you some good tips as to how to avoid paying too much tax, making sure that your property was properly assessed in terms of its valuation and properly classified by the county. And some of you took advantage of that. We're glad that you did.
We announced the Battle of the Resorts.
Yep.
This was a big one with the dispute between Park City Mountain Resort and Talisker and Vail and the ownership and who had rights. But the good news is, it is over.
It was a knockout.
It was a knockout.
Yep. Vail, of course, acquired Park City Mountain Resort in September, and they now control that resort. And it got rid of any concerns about the resort possibly not opening, and now we're starting to hear the benefits that have come. But we reported several times in our webinars about the progress on that, because it was something definitely to watch this past year. The facts of the conflict are pretty interesting. It led to Park City getting an eviction notice not once but twice. Then the judge made a decision as to what would be necessary for the resort to open, and then a couple days after that, Vail announced they were buying the resort, and just a lot has happened on that. And following that decision is, of course, the Epic Pass. So, Doug, tell us about that.
So the Epic Pass is the Vail's resort pass, and it's good at any Vail mountain, nationally and internationally. So here locally, it's good at Park City Mountain Resort and Canyons. So that's just fantastic for locals.
So one season pass, you can ski 2 out of our 3 mountains, or go over to Colorado, or go to California, all for the same price. Pretty awesome. The other big thing that we're looking forward to on this is Canyons and PCMR are going to be combined, not this season, next season, and they'll be connected, and they will form the largest ski resort in the U.S. with over 7,000 acres of skiable terrain. Now, Vail purchased the resort for $182.5 million. They now control 2 out of the 3 resorts, and now they are investing on top of that $50 million during the next 12 months to improve the resort. So going to be some very powerful changes, and a little later in this webinar we'll share more specifically what they are. The Vail factor is something that we've been talking about since the announcement, and what this is the big question: will Vail's purchase of PCMR have an impact upon the real estate market? A friend of mine by the name of Rick Klein, who is a private mortgage broker with Wells Fargo Home Mortgage, likes to look at the stats, and he actually came up with this graph along with a couple others that I'm sharing with you. What he did is he looked at the pending sales, so recent transactions that come together, haven't yet closed, following the announcement. Announcement was on September 11th. He looked at this from September 12th through the end of October, so approximately a month-and-a-half period. And he wanted to compare this past year with what happened in the 2 years beforehand. So the bars to the left, and you have 3 different colors representing single-family homes, condos, and land. You see what it was in 2012, then in 2013, and then the big jump, a jump of 41% increase, or 87 sales occurred after the announcement. As far as condos goes, that was a 65% increase. And so there does indeed seem to be a Vail factor that their ownership has stimulated and encouraged the real estate market. And that, by the way, is prior to their announcement of the $50 million investment. So I think it's going to help our real estate market. I think that's what it's saying.
Mm-hmm. So like we said, Deer Valley Resort did purchase a Solitude Mountain Resort. Solitude will continue to operate this year, the ski season, and Deer Valley takes control at the end of the ski season.
That's right. Then before the ski season, we talked about the supply and demand, wanting to update our audience and take a look at it going into the season, seeing where the best places are to invest and where appreciation is likely to occur. The supply was broken down by different geographical areas or property categories, and we're happy to answer that. That's a frequent question we get: where are the best places to invest based upon supply and demand? And we covered that a couple times. So 2014 certainly was an action-packed year with certainly once-in-a-lifetime changes with Vail and the Park City Mountain Resort, but pretty exciting things happening here. Also, what's exciting, and I guess this is a little bit of blowing our own horn here, but 2014 was our most successful year ever. We implemented new websites, some new marketing systems, which proved to be highly effective, and we expanded our team. At the beginning of the year, Dean DeLeon joined our team, and now Doug Olmsted is joining it, and he's going to tell us a little more about himself in a moment. But we really had a great year. We were able to help over 60 buyers and sellers. We still have 2 weeks left, so we might be quite a few over that number. But we've been able to help people buy and sell this year, and we're happy for that opportunity. And we might point out that the average Park City agent 2014 sold 3 properties the entire year. We were selling 19 properties for every one they were selling. So our marketing works very well. Our buyer team consultants are very good, and so we had a good year. And that's why we went and dragged Doug onto the team.
It wasn't no dragging. I came willfully. So my background is in running luxury resort hotels, and you know, the customer service skills and the business models, they really transposed right over into real estate. We've been very successful and look forward to helping you with your next investment as well.
And we welcome him.
Thank you.
He's a good negotiator too. So, speaking of negotiations, let's take a look at the Park City real estate market and see what has sold and what prices have been doing. Over the past 12 months, we've had 1,340 sales in Park City. This is homes, condominiums, and vacant land. This is all real estate brokerages combined. It's actually down by about 4% or 61 sales over that same period the year before. Now let's break this down into our property categories.
So in homes, condos, and lots, you can see the red represents December 2013 through November of 2014, the blue the 12 months prior, so you can see the year-over-year comparisons. First you notice that homes are down 9%, and you kind of wonder what that is, but it's not from a lack of demand, it's definitely just from a lack of inventory, like Ron mentioned. Just not as many homes available to be purchased.
Yep.
Condos, however, are up 33%, so that's good to see those increasing. And lots are down 6% as well, but again, a lack of inventory. There's just not too much dirt left in Park City to purchase.
Yep. Now, when we break this down even more, we're now looking at homes, and within the city limits, it dropped 9% from 195 sales the year before to 177. The county, Snyderville Basin, another 9% decline from 375 sales to this past year, 343.
And broken down to just condo sales between Park City proper and Snyderville Basin. Condo sales up 2% in Park City and down 2% in Snyderville Basin.
When it comes to lots, in the city, it was a significant drop, 29% from 55 to 39. But again, keep in mind, we just don't have a lot of inventory of raw undeveloped land inside the city, and so that decrease isn't a lack of interest as much as a lack of inventory. It climbed slightly, 2% in the Snyderville Basin, really 3 more sales this year than the previous year.
So average time on market, this is how long it takes homes and properties to sell. Real flat there, up 1%, so just a real healthy market.
That's right.
That's good to see.
And do keep in mind, we've mentioned this in the past, that according to the National Association of Realtors, typical time for a property to be on the market is, in a balanced market of buyers and sellers, is about 6 months. Longer in resort towns can be as much as 9 months. So when we see these number of days on the market, which are just a hair under 3 months, that's a very strong market for us. But let's talk about prices. Everybody wants to know
about prices.
What's happening on the prices, and we're happy to report that the prices are going up. In the city limits, this is homes. This is medium sold prices, the same time periods we mentioned before. Previous year, in the city limits, the medium sold price was $1,235,000, climbed up to $1,300,000, 5% appreciation there. We saw 8% in the Snyderville Basin, with the median price climbing from $708,000 to $765,000.
And a similar story with condominiums in Park City proper. Why do I keep saying that? Up 10%, which is great, up to $535,000 median price, and out in the Basin, up 8% to $350,000.
And then looking at land in the city, slightly down 2%. It's a $10,000 difference from $560,000 to $550,000. It's small sampling just because of lack of a number of sales, so I wouldn't give that a lot of weight. But where we see the value increase is 16% in the Snyderville Basin, from $285,000 to $330,000, and that was fueled in part because people couldn't find homes that worked for them, so they went out and bought lots, and owners took advantage of that demand and raised their prices.
Vail Resorts will be investing $50 million into Park City and Canyons.
Chump change.
That is just...
Let's see what you can do with $50 million.
So, to connect the two resorts, they're going to use what they're going to call the Interconnect Gondola. Basically goes over Pinecone Ridge. They're predicting that door-to-door will be about 8.5-minute ride to get from one resort to the other. So that is not very long at all to get over that ridge.
That's shorter than your typical chairlift ride.
Absolutely. Yeah, that's fantastic. They're going to upgrade King Khan and Mother load lifts and demolish and rebuild the Snow Hut restaurant.
Not a moment too soon. Also, they're going to go over and upgrade the Summit House at PCMR. I was actually in there yesterday skiing, stopped in there. and expand the Red Pine Lodge at Canyons and add to the snowmaking and other improvements at the resort. So there's a lot you can do with $50 million. The thing we're all going to walk away with and enjoy is the results. Resorts are both going to be enhanced in a huge way. Indeed. And connected.
Mm-hmm. Like we said, Ron's been doing this 25 years, so we're going to see what he sees in the upcoming year.
All right. This is always fun to do because before I prepare next year's, like I just recently did, I take a look at what I said last year, see how I did, and did pretty good.
Pretty well.
So here's what I see happening, and time will tell if I'm correct. But I do think land prices will be rising as sales continue in 2015. Again, for the reasons we stated, that there's limited supply, so people will buy land, and whether they're going to bank it for a while or build on it right away, they're going to turn to it. That leads into my other prediction, and that is we're going to see new construction. It's going to be pretty widespread throughout the residential neighborhoods, and that's always nice when you have new homes being built just for the overall neighborhood. The neighbors see that and they just want to do some improvements to theirs, and so it helps neighborhoods all the time.
It does.
Lower Deer Valley condo sales, I expect, will increase, and prices will increase. And those of you who have been following our webinars for a number of years, we've been watching this Lower Deer Valley condo market because it was really lagging. Other areas of the market were picking up, and it seemed to be just digging in its heels and not taking off. And it finally did this year in 2014, and I believe that's going to continue because now it has a short supply. Appreciation overall, I expect to rise somewhere between 7 to 10%. Now, that's based upon areas and types of properties. Our market is very complex. Our categories of people buying are different from high-end second home investment. So we don't have a flat appreciation that we can tell you because it just doesn't work that way. But I think somewhere between 7 to 10% is what I think we'll be reporting by year-end next year. Of course, Vail's capital improvements to PCMR and Canyons is going to strengthen the economy overall and the real estate market and attract new investors. Some will be attracted because they have a history with Vail and they want to come out and ski their resorts, especially since they could be coming from Colorado or California and on their same path ski here. But with that $50 million investment, it's just going to be better and stronger for the town overall. So this was a pretty easy prediction to make. If I get this one wrong, it's not a good sign. And then finally, investors will continue to buy with all cash. About 50% of our deals are all cash. They still have a lot of money. And with the stock market doing well, they've got even greater liquidity if they want to sell some stocks to buy real estate. I think that's going to happen. So those are my thoughts for 2015. We'll see how I did in about a year from now. If you have any questions, don't hesitate to contact any of our team members. You can reach us by our first name at the Wilstein team, Ron or Jeremy,
Doug or Dean.
And we're here to answer your questions. And thank you for taking the time to watch our webinar. We will update it in January, about the 13th, and give you the latest, greatest news and what's happening in the new year. So until then, we want to wish you a Merry Christmas, a Happy New Year, and a wonderful, happy time with your families. Bye-bye.